My guest today is Mohit Bhandari, who is the Managing Director, Investment India at Temasek. Mohit, thank you very much for joining us on NDTV Profit. You came out with your annual review where you have increased your exposure to India from 6% to 7%. Give us a sense from a macroeconomic point of view, how do you see the India growth story?
Right. So first of all, thank you for having us as part of your program, and great to speak to you. No, I think we are long-term very optimistic on India. We've been in India now for more than 2 decades, so we have seen the journey and rode the journey of India's economic growth over the last 2 decades. As you can see, our exposure to India has increased from 6 to 7 over the last year, but it has in fact increased from 4 to 7 over the last 4 years, and that just reflects the fact that we are very optimistic about India's both near and near-term outlook. But to your question, I guess it's because India looks good both from a macro and micro perspective. So the macro, I guess, is well known, which is both the GDP growth is strong, the inflation is well within the tolerance threshold levels. The current account deficit looks as good as it has been. And the fiscal deficit, the government is clearly on the path of fiscal consolidation. And with the kind of tax revenues that we see, there is enough room for the government to deliver on the targets. And this is all the results of effort that we have seen by the government over the last decade. So we are perhaps reaping all of that now. What you're seeing is structurally strong growth. What you're seeing is compounded benefits of multiple reforms that have taken place over the last decade. And what you're perhaps now seeing is second and third order benefits of various policies and reforms. So India in that sense looks very robust, as I said, at the macro level. At the micro, of course, corporate India is well positioned. As we've discussed in the past, the banks are well positioned, very healthy balance sheets. Corporate India has deleveraged, and therefore there are multiple levers that can support India's growth story. So we are therefore very constructive and optimistic about India, and that reflects in our step up in the position.
You more or less doubled your exposure to India from 4 to 7 in the last 4 to 5 years. As you invest more capital into this country, foreign capital into the country, which are the new emerging sectors which you see more interesting? The growth story on India is also about infra-led story. Have you increased your exposure to infra in any way? And is there a sectoral theme that you are now looking at? Consumption always has been one of them for you, but in various buckets. But can you give us an indication of how your sectoral themes have moved in the last 1 year?
Yeah. No, so last 1 year, as you would know, we had a big investment in Manipal hospitals, where we took a majority stake. So as a consequence of that, healthcare as part of our portfolio would have increased. But honestly, I would not go on a year-to-year change in sectors. I think there are 3 key sectors for us, which was financial services, healthcare, and what we call as tech and consumer. And we have these sectors also play into what we call as trends or mega trends, which is consumption and longer lifespan, and to that extent, we continue to focus on these 3 sectors. We have also invested in multiple sub-segments within these sectors, so arguably we hopefully understand these sectors better. So these sectors will continue to remain important for us. But to your point, yes, there are other emerging growth sectors like infrastructure, like green energy. And we have participated in growth of both. In infrastructure, we have done that both directly as well as along with the portfolio companies. So to give you an example, we would have partnered with our Singapore portfolio company, Ascendus, to build a warehousing and logistics company. We have partnered with the Schneider, so we have a joint venture with Schneider where we have 35% stake which you could say is broadly in the industrial space. And at the same time, our portfolio companies have also participated in the India growth story. So you have Singapore Airlines, which is now invested in Air India, where they are the second largest shareholders after, of course, the Tata Group. You have STT, which is perhaps the largest or the second largest data center player in the country. You have Sembcorp, which is investing behind renewable energies. And along with another platform that we have, which is what we call as O2 platform, which is along with another partner, EQT. Between the two, we would have more than 5 gigawatts, perhaps 6 gigawatts of renewable energy. So we have, to your point, yes, invested in infrastructure, both directly as well as along with our or via our subsidiary companies. Similarly, on what you may say green energy, or the broader theme of sustainability, which is core to our charter, institutional charter, because I think it is imperative for the planet. At the same time, this is where the government mandate is, which is to drive the country towards net zero by 2070. And we as an institution have even taken upon ourselves a more tougher target, which means a shorter timeline. So we have also been focusing on this space. I think over the last year or so, we invested in the EV four-wheeler business of Mahindra's. Similarly, we invested over the last year and for that matter 2 years in the Ola EV business. So we have made our efforts as well to be part of this sustainability journey, which is critical as well.
I would like to pick
having said that, the three key areas I spoke about earlier will.
I would like to pick your brains on the. I would like to pick your brains on the on the electric vehicle part of it. But before that, you mentioned in your presentation that key drivers for growth include infra-led capex, private consumption, and supply chain diversification. So just wanted to understand what excites you in these three pockets, and is there enough room for growth and companies available in these three pockets?
Right. So, okay, I'll go one by one. So when we say consumption, to be honest, consumption is a very wider theme for us. We even look at retail lenders in financial services as a quasi-consumption play. So consumption is therefore a wide spectrum, and to your question, consumption, private consumption is 60% of India's GDP, so will always remain important. And as India gets more affluent, the spend patterns continue to evolve, and to that extent we look for opportunities that play in well or drive as well as are beneficiaries of that growth in the private consumption. Infra, I think, is critical for the growth of the country. India has done a phenomenal job when it comes to digital infrastructure, and is similarly investing behind physical infrastructure. So the opportunities, the need for the country is there, and as we just discussed 2 minutes back, we are also participating in it directly or along with our subsidiaries. And ideally, yes, participating in allied themes like energy transition and so on. I think supply chain diversification, resilience is I mean, we've been excited about India even before geopolitical reasons started driving supply chain diversification. But yes, we do think that where there is an overlap or convergence of multiple factors like a strong domestic market, favorable government policies or incentives, and a strong local ecosystem, you will see supply chain diversification pick up faster or sooner. So you would see growth opportunities in all three. And to that extent, we look for the right opportunity for us in all segments. We are, of course, fundamentally a bottom-up investor, so these themes give you a broad trend, But ultimately, we also look for the right partner, and the right valuation is to make sense.
Give us a sense of how you see this platform emerging and growing from here on. We are expecting an Ola IPO also coming up in the next couple of weeks or months. How does an investor look at the electric vehicles platform vis-a-vis a conventional automobile platform?
Right. So, see, we think the direction or the broad trajectory, I guess, is clear, which is we think EVs is the future. And to that extent, the government or the regulations and the policy framework is equally aligned with it. What different people in the room may have a different point of view is on the pace of this transition. So there might be different points of view on the near-term pace or trajectory, but I think the long-term outcome is clear, or is, I guess, most of us will be on the similar page. To the extent that we are long-term investors, near-term ups and downs don't really bother us. We continue to remain focused on ensuring that the long-term case underwritten by us plays out well. I think, yes, the four-wheeler trajectory perhaps will be faster for the obvious reasons that the two-wheeler will require the charging infrastructure to also grow to drive the next leg of growth. But we are optimistic on both the two-wheeler and the four-wheeler EV transition that the country will take.
And how do you value these companies?
So we value our approach of valuation is fundamental and typical discounted cash flow basis. So we would look at the long-term outcome. So there is a view on how big the market could be, what market share your respective portfolio company could perhaps, under various scenarios, gain, bring it down to profit and cash flows, and then discount it back. Which therefore makes it, in a way, immune from near-term fluctuations. Not that we have any listed opportunity at this stage, but if we were talking about some other listed sector, we would have a similar approach. And if there are near-term volatility, where it is below what we think is a fundamental fair price, it would just mean an opportunity for us to go and add more in that name.
Mm-hmm. Mohit, you view India having emerged as a big geopolitical player. When such a thing happens in the face of a country, how does investing changes, or what is the implication of that for investing?
Okay, that's an interesting question. Let me answer in two ways or two parts. We have been long-term believers in India. In fact, if I step back, India or Mumbai was the first international office for Singapore way back in 2004. So we have been part of India's journey for the last 2 decades, seen the ups and downs, build our conviction, hopefully delivered on a very resilient portfolio and returns, which gives us the confidence. So to your question on how India's positioning in the geopolitical landscape impacts our investing stance, not materially or not significantly. I think we are long-term believers in the India story irrespective. But I would think that yes, India's, if I may say, enhanced status as an emerging geopolitical power does help. And if I have to say to the extent that India so very well navigated or walked the tightrope when oil prices rose sharply in 2022, 2 years back, in the aftermath or consequent to the conflict between Ukraine and Russia, India's ability to ensure oil supply at a reasonable price that works for the country is a reflection of that. Or for example, when we speak to corporates or MNCs, I think India clearly has moved from periphery to core of the discussion. And that of course reflects the fact that India is as we know, fastest growing large economy. But somewhere perhaps the fact that we are also emerging on the geopolitical landscape would be providing comfort to some board members as well in those MNCs. So it has I'm sure helped. I think those benefits will perhaps play out in the long term. But I think, as I said, our confidence or our optimism about India is irrespective of that and more bottom-up driven.
Given that as a backdrop, India is the third largest country where you have invested, right? In terms of exposure, it's around 7%. But there is a decline in exposure coming in from China and Singapore, which are the top other two investment destinations for you. How do you see India playing out in this? You have a lot of emerging companies and sectors coming up. You have a lot of portfolio companies who are now on the cusp of becoming critical size and being taken to the market. Where do you see India emerging as part of your overall portfolio?
Right. So, as we said, India has in Tamasek's portfolio increased or moved up from around 4% 4 years back to 7% in 2024. And as I said, this is on a stock basis, which means that incremental deployment or share of India in incremental deployment is higher, which is why the 4 became 5, the 5 became 6 last year, and the 6 became 7 this year. So India's share of incremental investment is higher, which is why it gradually reflects an increasing share in the stock. And to me, honestly, that is a reflection of the fact that India has been the best market for Temasek over the last decade. So both long-term past and of course the long-term outlook for India looks robust and constructive. So we therefore are, as we said, we have perhaps deployed about $3 billion last year, which is year ending March 24, and that has been the largest deployment in a single year from Tamasek's perspective. Last year when we met, we spoke about stepping up our pace of deployment in India to about $9 to $10 billion in a 3-year period. To that extent, we were able to deliver it last year, and we remain confident about deploying, of course, subject to availability of opportunities at the right valuation over the next 3-year time frame as well. So we continue to be optimistic about India. We will keep looking for the right opportunities in India. To your second part of the question, yes, companies in the portfolio are becoming more mature, and as they mature, they will look to list as well in capital markets. I think that's a natural part of their journey, and we are supportive. We are long-term investors. We don't need to sell in the market. At times, we come back and add more, depending on the situation, post their listing. But yes.
Can you give us a sense of the kind of divestments that you may have done in FY24, and if you can give us an idea of the kind of returns that you made?
So we don't share returns for a market or for a sector per se, and surely not on an annual basis. But as I said, India has been the best market for Temasek over the decade, and the fact that the market has done well also reflects in the confidence to put in more capital, which is how you're seeing the share of India increase. Divestments, to be honest, are we do divest at times, partly from a discipline perspective, and partly from as we reconstruct the portfolio and helps us to redeploy back into other companies or other sectors. So I'm not sure if those honestly are public, but yes, but our investments significantly outstrip the level of divestments that we have done.
Mohit, there are two critical themes which are coming in on sustainability as well. Battery solutions is one of them, where you have invested in Ascent Elements in US, electrolyzer manufacturer in electric hydrogen in the US. These are something which are also emerging in India. Do you see potential players emerging as well here, and you see opportunities in investing in these segments here?
Sorry, if you could just repeat the question, I lost you in between.
I'm talking about sustainable battery solution provider Ascent. You made investment in that in Ascent, or in electric hydrogen manufacturer, electrolyzer manufacturer, electric hydrogen in the US. And there's something, green hydrogen is something, a theme which is working, which has been working in India, and there are a couple of players who are doing it. Do you see opportunities in investing in investing in these companies?
Right. So we are always on the lookout for opportunities in this area. As I said, this is core to our broader sustainability theme and mandate. So there are two parts to it. Yes, you would see the recycling infrastructure also develop. As fundamentally, to start with, as the population of cars increases, the recycling infrastructure will also increase. Green hydrogen, I think, again is a significant growth area, both from energy security and then possibly energy export perspective. And to that extent, we have seen some announcements, and hopefully we'll find the right partner to partner with. But to your point, yes, these are both areas of interest for us.
Finally, I just wanted to get your take on some of the key themes which are working in the Indian market, defense being one of them, and green energy. You spoke about the renewable part of it, but we are seeing hydrogen being started to be used for automobiles as well. Do you see opportunities there? And in the defense space, which has been a theme in the last 12 to 18 months, how do you see that theme as well?
Yeah, so defense, I think, as a sector in India will grow. Also because it makes great sense for India to be self-reliant, and to that extent you will see the local defense industry grow. We honestly have been very small players, or perhaps absent players globally in defense. So to that extent, our level of participation is low, not because we don't think the sector will not do well, or rather the sector will do well. But at times we prefer to play to our core competencies. So if there are sectors that we think we know well, we would stick to them. And which is where we spoke about financial services, healthcare, tech, consumer, and so on. But on your other part, which is hydrogen, green energy, and so on, yes, we will look for all. In certain cases, it's still the proof of concept or the economic viability is still not there. At times, the technology is still evolving, and at times there are competing technologies as well. We do have the benefit of having a first look at what is playing out in other geographies, and to that extent there are learnings, and we overlay that with what we think may work or may not work in India, because India market may evolve differently, and to that extent we keep ourselves abreast and hopefully ahead of the curve. But yes, those areas, those sectors are area of interest. We will see something innovative and interesting emerge, but still it's an evolving space.
Mohit, it was a pleasure talking to you today. Thank you very much for joining us on NDTV Profit.